Hello everyone, how are we doing today? My name is Richard Zhang and I am the co-president of Blockchain USC. Welcome to the VanEck Southern California Blockchain Conference. It's been a crazy, extra crazy couple of days in our industry. A lot of people were hurt and more flaws in companies and systems were exposed. In times like this, it's important for us to remind ourselves of the purposes that we should be striving for with blockchain technology. While market gains are very important and beneficial, blockchain can enable much, much more throughout the entire world. Everyone here sitting here today, including speakers and members of our audience, have the chance and ability to enable more access, opportunity, and mutual growth using blockchain. And our biggest goal of hosting this entire conference is to enable more socially beneficial developments to happen. If you're a crypto native, let's keep building together, regardless of market conditions. If you're new to blockchain, welcome. There's a lot of noise, but let's focus on our goals. There are a lot of people I need to thank for making this conference possible today. First, thank you to our sponsors and partners for supporting this student-driven initiative. We're grateful that you put the trust in us and that you care about the positive growth of the entire industry. I also want to thank the USC Marshall School of Business. Marshall is a leading school in blockchain education and development. It is a pleasure for us to work with Marshall, and we're proud to call ourselves USC students today. Fight on. Last but not least, I want to thank the entire Blockchain USC team. The work and dedication that you commit daily to making the USC, Los Angeles, and broader Southern California blockchain communities better are truly inspiring. Our research, education, content, technology, and community teams have consistent output and contributions in the broader industry with our research articles, education curriculum, governance initiatives, and more. It is my personal, absolute pleasure and honor to be with this group of quote-unquote based Blockchain USC teammates. Now we're going to introduce our very first event of the day. We're very excited to have Cathie Wood and Frank Downing from ARK Invest on our top panel featuring the topic of blockchain and Web3 state of the industry. The panel is moderated by Professor James Healy. Cathie has over 40 years of experience identifying and investing in innovation and has been recognized as a global leader in fund management. Through an open approach that cuts across sectors, market capitalizations, and geographies, Cathie believes that ARK can identify investment opportunities in the public markets resulting from innovations centered around industries like blockchain. Prior to ARK, Cathie spent 12 years at AllianceBernstein as CIO of Global Thematic Strategies, where she managed over $5 billion. She also held various leadership positions at other prestigious funds. Cathie is, in fact, a USC alum. Cathie received her Bachelor of Science, summa cum laude, in Finance and Economics from USC. We're very happy and honored to have Cathie join us today. Frank joined ARK in April of 2021. As Director of Research, Frank guides the research of the next generation internet team with a focus on crypto assets and cloud computing. Prior to joining ARK, Frank was a senior technology consultant in Deloitte's cloud engineering practice. His skill set includes data engineering, full stack web development, product management, and technology strategy. Frank graduated from the University of Michigan with a business administration degree. Last but not least, our moderator today is a professor from USC named James Healy. James is a USC Marshall adjunct professor in fintech and blockchain. He has been teaching here for 7 years. James is the president of Digital Disbursements and a former member of the Federal Reserve Bank of San Francisco. James previously worked for Carl Icahn, GE Capital, and Ford Motor Company. Now let's welcome the panelists, and I hope the audience enjoy these 2 days of keynotes, talks, and workshops. Thank you.
So Cathie, maybe you could give your comments on ARK overall, and then we can get into more of the content.
Well, thank you, James, for inviting us to serve on this panel. And Dean Garrett, love working with USC, very proud of graduating from USC. So I founded ARK Invest in 2014 for two reasons. One, to focus exclusively on disruptive innovation, technologically enabled disruptive innovation. And two, to add new dimensions to research. So opening up our research ecosystem, giving our research away, becoming the first sharing economy company in the asset management space when it comes to research. And so many people did not think this was going to work, still don't understand what we're doing or why we're doing it. But this is the ecosystem of the future and is serving us very well. Our focus is on 5 major innovation platforms. When we started the company, we had 4. They were DNA sequencing, robotics, energy storage, and then next generation internet. Once we began to do our research on Bitcoin specifically in 2014 and 15, we said, wait a minute, this is a very big idea. And so we separated a next generation internet into artificial intelligence and blockchain technology. And what I love about technology today is how inefficiently priced it is in the market, needless to say, after 18 months of being pummeled by higher interest rates and inflation. And one of the reasons it's misunderstood is because of the convergences that are taking place between and among technologies. And I asked James earlier today, are you all working on the convergence between blockchain technology and artificial intelligence? Because my instincts are telling me there's something big brewing there.
Love it. Thank you for that overview and get everyone grounded in ARK and your thoughts. I feel like I should just say current market conditions go and have you guys launch into it. But everything that's happening today, I haven't checked my phone in 15 minutes, so I'm sure something catastrophic or huge has happened, and I'm not up to date. But would just love to hear both your thoughts on what's happening in today's market, where's it going, how are you thinking about it?
So would you primarily the crypto markets? Yes.
But yeah, primarily meaning the crypto markets, but also if there's something more broadly you want to share.
What's been interesting about the crypto markets is, they've been acting. We consider crypto a new asset class. And yet, in this risk-off period, particularly since the beginning of the year, it has been acting like a risk-off asset, like our funds. Last year, that was not the case. Our funds started out underperforming in February of 21 as interest rates and inflation went up. And the markets reached all-time highs, as you saw, both the crypto and the equity markets. But the Fed, pushing the envelope here and taking really interest rates up 16-fold in 9 months. This has never happened in history. Even when the Fed, back with Chairman Volcker in the early 80s, was trying to strangle real inflation. And I understand we have inflation, but it hasn't been built up over 15 years like that. Volcker increased interest rates twofold. It was from 10 to 20%, and many people dismiss the point that I'm making because the base started from such a low rate. That's the point. It started from such a low rate, and people had gotten used to 0% interest rates. That 16-fold increase I think, is beginning to cause breakages, and I do think crypto is one of them.
Yeah, interesting.
Did you want to say anything?
Well, I think maybe to set the stage for kind of just opening the box on everything that's happened in crypto this year.
Yeah.
Like stepping back and thinking about how we look at the crypto markets. We spent a lot of time last year thinking about this closer to the peak of this bull market, how the market looks different from it did in the last crypto cycle of 2017 and 2018. And what we've noticed is that there's so much more happening in crypto now, not just around something like Bitcoin as a censorship resistance alternative to central banking, but we also have DeFi and Web3, and how do all these things fit together? And so what we think and what we settled on is that public blockchains inherently are providing a coordination revolution by lowering the amount of trust required to transact over the internet. And that's catalyzing several kind of revolutions in parallel. The first is this monetary revolution, where you have a nation-state resistant form of money that is an alternative to things like the Federal Reserve and central banking and the SWIFT payment system, and that's really kind of embodied by Bitcoin. But now we also have two other revolutions, the first being decentralized financial services, or a financial revolution that's really taking traditional financial services and moving them on-chain so they can operate in a more transparent, less intermediated, and more open way. And then lastly, an internet revolution broadly, where really the advent of digital ownership is allowing more user-owned and user-operated internet and content companies, and giving more power to creators and less power to the content aggregators of Web2, like Facebook or an Instagram or a Twitter, for example. And I think the story of the last 2 years has really been a market cycle around this financial and internet revolution, where starting in 2020 with the DeFi summer, where the promise of a smart contract blockchain like Ethereum actually had its first use cases, where you were seeing all forms of financial services deployed on-chain, be it exchange of assets. Finally, had something to do with the ICOs that were created in 2017, as you can trade them. You had lending and borrowing. You have decentralized insurance, and so many other different types of derivative products, which really kind of ignited the bull market. But also, when pushed to the extreme, is what we've seen over this. Really, the story of this year is too much in the way of yield seeking, leading to excess risk being taken, and the deleveraging that started with Terra Luna and now has gone all the way to a centralized exchange in FTX.
Yeah, and this week, what's been very interesting as the markets have been imploding is the question we've been asking ourselves is, all right, the Terra Luna debacle was $60 billion, right? And that started, this was in May and June, that started a period of de-risking and management replacements. I know at Genesis and other organizations, all about risk, de-risking. And we're trying to figure out, this seems to be, we're not sure exactly how big the hole is in terms of who's going to be left holding the bag here. Is it $10 billion? And is it going to be systemic? There's a live debate. We don't think so, because all of this started back 6 months ago. But I know that technicians are out there. Technicians are very interesting people and their equity, their bonds, they don't know what any of these things really do. They just look at charts. And so it's been interesting for a number of months to watch since the Terra Luna debacle, Bitcoin in particular, very stable while the equity markets were gyrating. So we were thinking, that's very interesting. What's going on there? And so now that it has broken below, or it did at least for the last few days, a base that had been established between, it was really 17,500 and 23,000. The question is this systemic, and will it take Bitcoin, this episode, down to what chartists say is real support, which is around $10,000 to $12,000. So this is the live debate taking place right now. I think the bears are really trying to push it, just like you've seen them push our strategy. They just have in mind, hey, this is a reincarnation of the tech and telecom bubble and bust, and ARKK is the bust. And so you have a bunch of algorithms, and I call them mindless algorithms. They're operating on a few variables that some human being thinks is appropriate. But I think, and this is what I mean by the inefficiencies in this market. So I would be surprised if Bitcoin does move down to that range now, because this has been the real test. We don't know the whole, seems like $10 billion, and we don't know who the counterparties are. So we're in the period of major uncertainty right now, and then we get a CPI this morning that turns the whole world around. But there will be a little bit more of a reverberation here, certainly, as we begin to hear who has been hurt. But what you will see, and we saw it with Terra and Luna, is those hurt the most tend to be the most opaque players. Yep. Hedge funds, these smart contract platforms, the margin calls took place automatically. They were the first cleared, and able to get out of the tunnel as everyone was trying to get out at the same time. They got out first, and so we'll see who's left holding the bag. And I do think it's a lot of hedge funds and venture capital.
Yeah, that's a very interesting way to think about the de-risking over the prior months and the impact that has. Part of the news of this week, I saw yesterday your increased position in Coinbase. And Frank, would love to hear your thoughts on that dynamic, obviously in context of FTX and Binance and all these other things, but can you speak to that?
Yeah. One of the many things we were discussing this week is how does this leave the other exchanges in the market? And Coinbase is an exchange and a company that we have very high conviction in. We've seen it over time as kind of the trusted on-ramp into crypto, especially in the U.S. And they've been pretty vocal in Washington as well about pushing crypto forward policy. And I think they haven't been immune to the sell-off in the crypto markets and losing trading volume. I think there's very positive developments in their business. If you look at their subscription services, which they're kind of building up to offset the volatility of the trading business, that grew 45% year over year. And if you held crypto prices constant between last quarter and this quarter, it would have been up 88%. And that's on the back of really growing their staking business, benefiting by Ethereum successfully completing its transition to the merge, and interest income that it earns from USDC. So they're definitely benefiting from the higher rates as well. So what we see, kind of FTX really, and this caught us off guard, to be honest, setting the industry back with Sam so vocal in Washington and really being the face of crypto policy. It's really unfortunate. But we see the fast-growing business that FTX had, which was taking share from Coinbase over the last year, ceding some of that share back to Coinbase. The crazy regulated derivatives products, that international business might go over to Binance, but Coinbase is looking to compete more there as well. So we see that as all to Coinbase's benefits in the long run.
Yeah. And it was really interesting to watch Brian Armstrong tweet as FTX was going down, basically saying, we are not involved in anything like what FTX is now being accused of doing, of course. Just being very vocal out there. I like it when a CEO comes out during a period of crisis, and we're out there talking during crises all the time, whereas other portfolio managers and analysts are not advised to do so for compliance reasons or whatever, but we think it's really important to communicate. And Brian had a very strong point of view. My sense is he had a notion of what was going on and felt like he could needed to go out there and say that and draw a contrast between Coinbase and FTX. The other thing is he's highlighting, even though I know Coinbase aggravates the SEC to no end, it is trying to blaze a trail in terms of new regulation. Let's talk about this regulation in a way that makes sense for a new asset class. So he brought that out as, hey, we are really trying to do the right thing here. So U.S. versus rest of the world, much more regulated. I think that will accrue to Coinbase's benefit from a share point of view as well.
Yeah, makes total sense. In mentioning communication, one thing that I love about ARK is just all the communication that you have, as you mentioned, and the Bitcoin Monthly, these other things that you produce in terms of education to share with the world is always interesting, with the on-chain analytics, the activity with the miners. Would love your thoughts in today's day and age. You mentioned a little bit about price with Bitcoin, but kind of more holistically what you're seeing generally through that.
Yeah, it's interesting. When we started we hired David Buell, who had consulted for Glassnode, but who had created, this is on-chain analytics, this transparent ecosystem. We can see the economy ticking moment by moment. It's extremely transparent. And when I first saw his work and the work of Glassnode, I thought, okay, this is technical analysis. This is just technical analysis. But it's not. It really is the heart. You see the heartbeat of the ecosystem, which is very interesting. You can't see that with any other asset, really. And so what we're seeing now in terms of metrics, and as a portfolio manager, like, Frank's going to know, be able to define and explain every little new on-chain metric, and they're coming out all the time. But there are a few that he's trained us on, David, and most of them are in capitulation phase right now. Most of them are. There are just a few that haven't given a buy signal, but they won't give a buy signal until the market starts running to the upside. So we'll see what happens in these next few days. But in terms of the downside, they all were flashing, okay, if you knew nothing else but these metrics, you would be buying Bitcoin right now. Now, of course, we had, again, after Terra Luna, you never know what the domino effects are going to be. And that's why this notion of, okay, how much have we already de-risked the system? And Frank can give you metrics saying, yeah, the system is really de-risked. And so that helped give us confidence that we could maintain our positions and not move into emergency mode. But maybe you want to talk about
a few numbers that give us confidence, at least. I think you can look at the holding base of Bitcoin supply and segment it into different categories. And one of those categories can be long-term holders. So those who haven't moved coins out of their wallet in a certain number of days. And what we're seeing is in the time of what looks like a massive sell-off, long-term holders are accumulating Bitcoin. So it's signaling a really strong holder base. And in fact, it's the highest it's ever been. So we're at an all-time high of 72% of Bitcoins in circulation are held by this long-term holder base.
And this may be because institutions are moving in with Coinbase's, BlackRock's agreement. It was only in the last 3 to 6 months. I think that's one reason that's holding up.
Yeah, definitely. And then looking at from the DeFi world, for example, and this is something that gave us a lot of confidence as the Celsius fallout was happening, is that we could see all of their positions on chain and see how levered they were and how they were exposed to different assets, whether it was Lido staked ETH or straight staked ETH that is completely illiquid, or locked up positions in Compound and Aave, two of the largest lending markets. We could see at what levels they would be liquidated, and that gave us an idea of like where the market might press the price to. And they chose to pay back those loans before their central counterparty loans, which is pretty incredible.
And I hope you don't mind my sharing this, but we were watching this on a day-to-day basis. We were watching the movement, and it encouraged Frank to, I guess you sold out of your, which position? I don't know.
Oh, I had Ether on Celsius, earning yield.
That was
and
it.
so I took it out. Luckily, just at the right time.
But then the other metrics about leverage in the system, I know you've been
so
focused on that.
the total amount of borrowing in that's happening across Aave and Compound, those lending markets, the loans outstanding have gone down. Last time I checked, it was 70%, but it's probably more now. So you can see that the system is much less exposed to risk now than it was previously. MakerDAO, for example, the protocol that creates the DAI stablecoin, is another example where 6 months ago we were seeing that, if prices drop 10, 20%, we could see hundreds of millions in liquidations. And now positions are de-risked such that you'd need a 30% drawdown just to get up to 50 to 100 million in liquidation. So it shows that the amount of risk has decreased considerably.
Right. And the other thing, it's interesting to have watched these last few days. There was some hope that Binance would take FTX over. I was making the assumption, and I think most traders, most experienced traders, especially after Terra Luna, assumed that it was a goner. Although the Bitcoin price did break after that, so there were a lot of people out there who had some hope. But I think that was yesterday's break in Bitcoin. It was kind of a shock to people, those who maybe aren't professional traders. And so we'll see. We're watching Bitcoin very carefully here because it's back right at the level which was the low in that $17,500 to $23,000 range. So again, most traders will be looking at that and seeing if it can punch through, or if we need more information about who's holding the bag here and basically is lost out.
Yeah, makes total sense. And I'll ask one more thing, and time is flying, and then maybe go to the audience for a question or two. But I mean, all the news, you're going through it, Terra Luna, Celsius, FTX, all of this thing. There's so many things happening, but taking a step back from the day-to-day and try to differentiate, news of the day versus long-term impact in the industry, would love, to hear what each of you are thinking about, maybe one thing that's more kind of lasting, structural, like mega impact that we should all be thinking about today.
Yeah, I'll start and then hand it to Frank. When I often say, keep your eye on the prize. Keep your eye on the prize during moments like this, including all of our other innovation platforms and our other strategies, equity strategies. But when I think of the three revolutions that Frank described, I just keep focused on the fact that in the case of Bitcoin, this is the first. Each one of these words is really important. First, global. That's a big idea. Private, no government, no throat to choke. Private, digital, rules-based, monetary system in the history of mankind. That's a very big idea. When we think about Web3 and digital property rights, I'll go through those. Again, I just repeat to myself when I'm watching the cascading. Okay, first, that's big. Global, that's very big. See, these are automatically global. We used to be in a world where you started in the US and then you rolled out gradually. But first, global, digital, immutable, they're working on that one. Property rights system, that is a huge idea. My background is economics as well as finance, and if you're a student of economic history, Hernando de Soto, Thomas Sowell, you'll know that property rights are critically important to lifting people and countries out of poverty. And I think that many people do not understand how much we're going to live in the digital world and how much identity and status will reside there. And I just have one anecdote on that. Internally, one of our interns who is now working full-time with us, T-shirt, jeans, no logos on anything. I just, we start talking about Web3. This is, maybe a year ago, maybe 9 months ago. And I hear him talking about, this digital asset and that digital. I said, why are you like, he said, oh no, this is where I spend all my money. So we actually have done a study which shows that physical consumption, the consumption of physical goods, will give way to, and most people can't believe this in the traditional economics world, will give way to the digital world in many ways. And then DeFi is as smart contracts. Many people say, I don't believe in Bitcoin or whatever, Ether. I believe in blockchain. And I said, okay, fine. Take the word crypto out. Think smart contracts and think technology. And think about how it's going to transform our lives.
I think two things for me, just going off of that, is the kind of all of the market events that we've seen have not been an issue with the underlying infrastructure of the public blockchains themselves. It's been the central parties that are acting as intermediaries on top of them that took excess risks or committed outright fraud in several cases. So that gives me confidence that we're going to see a swing towards more transparent and more decentralized operations in and around the blockchain and crypto asset space. So that's one that I take with me. And then the second is just the growing institutional adoption. You see it in the long-term holder base on chain, but you also see the Monetary Authority of Singapore in their sandbox. They just did the first on-chain Forex and government bond lending with JP Morgan on Polygon using a fork of Aave. So if you asked me if JP Morgan would be forking Aave and doing a transaction with Singapore, like I wouldn't have had that in my things that would happen this year. So it's very, very promising.
I'll just say one more thing. What has happened during the last 6 months, starting with Terra Luna to FTX, has given us new appreciation for the fully decentralized, completely transparent ecosystem that Bitcoin is, and I think this notion that we're starting to develop a scheme to determine decentralization, centralization, and where we are in terms of money. When it comes to money, when it comes to convenience and some of the things going on in Web3, we will see more centralization. But again, this idea when it comes to the most important and secure network in the world is transparency, and decentralization is critical.
Yeah, I totally agree. And so we have a minute left, and this is flying by. And I could stay here all day, but thankfully we have amazing speakers behind us as well. But maybe 30 seconds apiece. You're a student or someone that's looking to get in this community. Where would you look? How would you spend your time? You're sitting in the audience right now. What would you be thinking about?
I'll start, and Frank probably has a much better answer. But what I find interesting about students generally today is when they see something they're interested in, there are a lot of ways they can power into it. And I know this is one of the reasons we set up ARK the way we did. I am sure when we started ARK up, Twitter was for tweens, teens, and celebrities, right? They've all churned, not all of them, but they've churned out. And now, the people we can follow and who follow us so that we can have this exchange. If you love what someone's doing out there, like in the case of ARK, what a lot of people have done is they'll look at our research and they'll follow our analysts, and they will look at who they are following and start following some of them. So you can get into a subject deeply by following these conversations on Twitter and then interacting with those who are having conversations. And it's amazing when we're DM'd, how often we will answer, even though, because especially students.
So when you DM Cathie, just say you're a student. Go ahead.
I think for me, we were talking about this before, but I didn't have a blockchain miner available to me when I was in college, so I would sign up for that. And then second is, I got into crypto because it's an open network that anybody can join, and I started mining at home. And that's how I got into crypto. And if you had asked, I would have been working in crypto full time. I wouldn't have thought that was ever a possibility. So just kind of getting your hands dirty and starting, download MetaMask and do anything. You learn by doing very quickly in this industry.
We hired Frank before we knew he was an Ether miner, and we did not hire him for crypto. But guess what? This, it's just, you go down this rabbit hole, and I've seen it time and again.
Yeah. Well, thank you so much for spending your time with us today. Thank you to the audience for engaging. And
Thank
please.
you. Thank you.
I don't know.